Hello everyone, before we get started, don't forget to subscribe, click on that notification bell, like, dislike, comment, share, let us know what you're thinking. You could also follow us on Spotify, Apple Podcasts, and wherever you get your podcasts. Now, today on the Angel of Words podcast, we will be learning how to go about getting a home, because we all want to make it, we all want that dream house, but what do we do when we have the money to get there? So for some clarity, I reached out to Katherine Perez, home loan expert from Veterans United Home Loans, and she will be with us on deck on the Angel of Words podcast. Hello, everyone, and welcome to another edition of the Angel of Words podcast. I'm your host, Angel of Words, and today we have Katherine Perez, home loan expert for Veterans United Home Loans. Ms. Perez, thank you for joining us here on the Angel of Words podcast. It's a pleasure to have you.
Same, Angel. Thank you for making the time out to talk.
Oh, yeah, for sure. You know, it's funny because I'm doing all of this with the brand. I have this podcast, which I eventually want to turn into a show because, I want to progress in my career and buy a home. And then it struck me. I have no freaking idea of what it takes or what the process is to actually buy a home. So right. If I were to ever get, that kind of bank that I'm looking for, I would be stressing out. How do I go about even purchasing a home? How I know they're not taking advantage of me? How do I know this? It was giving me nightmares. And I woke up one day and I'm like, I got to find someone to talk to me on the podcast about it. Because I'm pretty sure that I'm not the only one out there that is having these kind of thoughts, that is actually, that thinks about this. Like, what happens if I do make it? What happens if I do cross this bridge? What happens if I do get a great job and it's me and my wife want to buy a home? How do we go about it? And I'm so happy that you're here to bring some clarity into the situation. So first and foremost, I would like for you to introduce yourself and what you do at Veterans United Home Loans.
Yes, sir. Katherine Perez. I am a senior underwriter at Veterans United Home Loans. For those of you who don't know what underwriting is, it's not something I grow up saying I want to be an underwriter, but I mean it's a really, really rewarding job. Basically, what I do is I make sure that the home that you purchase and you want is feasible for you, as far as income, as far as your assets, a lot of finance analysis. So I'm the person in the back end that does all of that number crunching, and I'm the one that says, yeah, you're going to get a home for the amount that you want, or no, I can't get you that loan because it doesn't work with your finances. So that's what I do in a nutshell.
All right. That's awesome. So you basically the one that analyzes the risks for the company. So when when you first told me that you were an underwriter, I'm thinking like you're that guy from Along Came Polly, and you're like, hold on, can I sign up on this crazy person's health insurance? Yeah, all right.
Although that sounds like an amazing job. Ben Stiller did a great job, but I do analyze the risk, but at the same time, it's all about being ready, being prepared. And I'm glad that you're, getting this out to everyone because you're not the only one that stresses over this. This is an extremely tedious and strenuous process, and it's life altering. It's an investment. It's a 30-year investment for the most part. So this isn't something to take lightly. And I'm proud to at least have the knowledge to spread, and also for my own, my own purposes. So I'm excited about being able to talk to you about it.
Well, that's great. Now, first, can we talk about the different types of home loans? Because you hear all these acronyms, FHA, regular home loan, VA. I'm like, oh, my God, yeah. That's just like, you get so overwhelmed, So could you break down what the different types of loans are, what those things mean?
I can try my best. I specialize in government loans, VA. Primarily, so that's veteran affairs. Those are for active duty members or veterans, retired. All sorts of veterans, even for their surviving spouses. All the kind of benefits you can think of for a veteran. I supply that in my role. There's FHA, that's another government loan, but that one has a little bit more overlays and guidelines. VA is pretty standard. We have a lot of overlays because we want to give the veterans a good home to live in. They deserve it. And then there's a conventional. Conventional is pretty much your straightforward loan, 5% down, 2 years history. I could go on and on, but there's differences. But those are the three main: VA, FHA, and conventional. Those are the three main that you would probably even consider buying a home with.
Before you go to purchase a home, what is the most important thing that you should be aware of before you even step in there? Into a bank?
I would say your own personal finances is a big one. If you don't have your own personal finances in order, you're probably going to get a pretty crappy rate. Your Fico score, which is your in between, there's three credit bureaus. There's Experian, there's TransUnion, and there's Equifax. So with those three, you get a FICO. So the middle score, so let's say your credit scores are 600, 650, and 700. What's your middle score? It's your 650. So your FICO has to be greater than 660 combined to be able to get approved for any of these loans, to be honest. And the higher your FICO, the better rate you're going to get because you don't have this. It's less of a risk, So we're going to put less of a risk on you because you've shown us you can obtain a mortgage. I'm going to give you less risk, less interest. For the higher risk ones at the 660s, you would say are the higher risk ones. Yeah, we're going to give you a little higher rate because we want to make sure that we can trust you. That's kind of the mentality you have to think of. So the better your credit, the better your rate, the better your mortgage payment, the better you are. Point blank. So I would say really focus on your credit. Your income, you can get away with, 2-year history, we can be inconsistent, but have a good 2-year history. Make good income because then that ties into your debt to income as well. But there's a lot that goes into it, Angel. I'm sorry, I'm rambling.
No, yeah, please let us know because we want to know, we're here to know the idiosyncrasies, man, because, I don't want people that, work underneath the table and stack up $250K and, because I'm like, I don't know how that works, because are you going to get a home loan if you have like a 200 credit score, but you have $250K in your cash money?
Not.
I want to know why that is, why is that when you have the money?
Your three main is credit, income, and assets. Meaning assets, the liquid assets in your bank account or your 401k, your retirement plans. That's going to solidify and give you reserves for any kind of defaults you may encounter. For example, COVID, right? Real life. Yeah. A lot of people lost their jobs. We gave exceptions for COVID because they had such a high reserve, because we can at least say if you can't make your income, if your credit's pretty shitty, if your credit is pretty crappy, at least you have something to fall back on. You have 100 G's. You can pay my mortgage 10 times over. You know what I mean? Like there's a lot of little things that we look into, but those are the three main if you think about it.
Now, how has COVID affected? I mean, it's funny that you brought it up. Like, the COVID situation. How has that affected what's going on in your business right now? Because like you said, a lot of people may be going into default and things of that nature. There's a big scare about evictions. How does that affect you over there at Veterans United Home Loans and overall in the industry?
The industry, bittersweet, but it's booming. It is booming. The interest rates right now are significantly low, record low. In fact, I just locked into a mortgage myself at a 2.625 rate for 30 years with a 5% down payment.
Hold on, 2.625 every month on your mortgage on the interest rate?
Yep.
That is pretty low. I mean, I've heard numbers usually like up to 12 through 20.
But, I mean, it's beneficial that I am an underwriter because I live that life too, so I really got to benefit from being an underwriter because I know what it requires to, have your dream home or have a better interest rate. You really have to think about where you want to be in life when you get a home. Are you struggling right now because you have, kids? A house might not be the best choice because now you're looking at possibly, having money for repairs, you're needing money for other things, a higher mortgage payment, higher electricity bill, things like that. But in this case, because I live in Texas, I'm not sure if you're familiar with the residency out here, but Texas living is pretty economical. So the rent here actually is higher than the actual mortgages here because it's cheaper to buy. So in this case, it would be beneficial for someone to get a home out here versus rent. So it really just depends on the scenario of someone, of their needs, because that's what's going to determine what route you want to take as far as a mortgage or not.
Now, I'm glad that you brought up interest rates because that was a big cause of the recession back in 2008 going into 2009.
Yes, sir.
That's like the boogeyman, like interest rates. Like, why is that so important to make sure that you're locked into an interest rate? And number two, are they still fluctuating like they were back in the days? And what does it mean when you get like a bad mortgage? What does that mean? What does that entail? How do you know you're getting locked into a bad mortgage?
Well, I mean, there's a lot of different things, Angel. But basically, to answer your question is, your interest rate is either going to be fixed or adjustable. The market right now, it's pretty consistent because of the COVID stuff going on. I'm not going to say that this, it doesn't fluctuate this much, but in 2008, there was a lot of fraudulent stuff going on as well. So luckily with our lower rates right now and the way that we've managed that, backfall in 2008, I think we're being a little bit smarter about the economy itself. But the interest rate right now is anywhere between 3 and 6%. What you do, what that interest rate means is that you're going to pay 6% of the principal of the loan. So let's say you get a $100,000 loan, you're going to pay 6% of that, and then they're going to divide that into 30 years worth of payments, and that's going to make up your principal and interest. Now, your insurance and your taxes can also be escrowed into your mortgage payment, which will then combine your total payment for the home. Monthly.
What does that mean in layman's terms for the people out there that don't know what escrow means and things like that?
Escrow means you're going to, no choice whatsoever, you're going to have to pay taxes and you're going to have to get insurance on your home. The bank needs to make sure their collateral is insured, and the city and the state want to collect money from us. Property taxes, that's what it is, right? So those are just very, that principal and interest are your 4 payments that you're going to be making towards your mortgage.
All right, could you say those again, 1 through 4, so that people, can write it down when they're listening?
So principal is basically your loan, right?
So it's principal, yeah.
And then your interest is what you're paying on the loan.
Okay, which is overall on the overall loan. It's not something where it's broken down month to month. It's the overall 6% on the whole loan.
Exactly,
so
because you're going to have a fixed rate. So you're going to have a fixed rate for 30 years for 6%. So fixed, okay? So then there's your taxes, which basically you pay an annual tax. And let's say it's, $12,000. That's very high end. 12,000 divided by 12, you're paying $1,000 a month just for taxes on top of your principal and interest. And then goes insurance. Insurance is going to be, $1,200. So then you add the extra 100. 12 divided by 12 is 100. You add that into your mortgage. This is getting very complicated. I'm so sorry.
No, it's good. No, I'm definitely following. Definitely following. And and I want the actual audience to know what's going on, because I'll be honest with you, it's complicated and it has to be complicated for people because I want people to understand what's going on when you actually go out to purchase a home, and this is what you're going to encounter. But at least if you have some kind of information, you have some background, from people that come from our backgrounds, at least you know what you're getting into, and you may not want to go and buy a home so quickly because now we've broken it down to you. So like, can you afford not only to pay the home loan, but everything else that goes along with owning a home? You know, because it isn't just paying a home loan. Then there's other things that are involved in the situation as well. And I appreciate you breaking that down to us, because I mean, it's important. You know, people need to know what they're getting into, and I think that sometimes they don't know what they're jumping into. They're like, oh, I got some bread, let me go buy a home. But then you know, that's even like how a lot of athletes get in trouble, because you know, they buy these mansions and they don't understand what goes around buying that mansion, and the maintenance and the upkeep and the extracurricular bills that go along with owning that kind of property. So, you know, I really appreciate, you know, you breaking that down for us. Now, refinancing, right? People talk about that sometimes, right? You know, you said the COVID situation's going on. I would imagine that there's maybe a lot of refinancing probably going on because of the situation. Is that something that the underwriter deals with beforehand, or is that something they have to come to the bank to do after they realize they can't pay their bills and they're in default?
Honestly, refinancing is for anyone that wants a better interest rate, or because that automatically ties into your monthly payment. The lower the interest rate, the lower your monthly payment is. So in a situation like now, where there's record low rates, if you're going to go down at least 1 point, which means if you're going to go from 4% to 3%, I would recommend it 100%. It's just going to bring down your mortgage payment. And if you want to also look into a streamline, which basically means that they could, you won't pay anything up front, closing costs. It's beneficial for someone that doesn't have the closing costs up front. You're getting a better interest rate, and you're going to have a lower mortgage payment more than likely. So if you get a lower rate, go for it, as long as you could manage it. That means that they have to go through your whole analysis as well, income, assets, credit. That's a whole different underwrite after the fact. But if you can do it, if you can do it, do it.
Wow.
Yeah.
That's crazy. Now, you know, I watch a lot of TV, you know what I mean? That's my kind of like my thing, you know? Besides sports, it's television and movies, you know, because that's what I want to get into. And I see a lot of subplots where people need to like pay people's bail and they put their houses up. Like, you know, do you know what that's about? Is that like a refinance situation? Like, you know, what are they actually doing when that happens? Like, can you, you know,
those kind of situations, they vary. They vary. I honestly don't know the details to that. I know that a lot of people just, you know, want to purchase your home because they are in debt and they know that they can't afford the payments. So they offer a short sale, which pretty much means I'm going to sell you, I'm going to buy your house for less. You know what I mean? And then you'll only owe this much versus owing this much, because if you go to foreclosure, you're going to owe the entire collateral. So there's different ways around it. Are there scams? Yes, there's probably scams. Are there legit ways? More than likely, you'll have to go to the bank to do that directly. But those are situations where you can get relief. Now, it may impact your credit for a few years, actually 7 to 10 years, if you do something like that. But it just means that, this is a very serious situation where you have to make sure you can afford your payments. And you have some kind of backup plan reserves, what we spoke about before, to make sure you can make those payments. Because if you can't, and you go through foreclosure, if you go through bankruptcy, if you go through short sales, those are all ways you can mess up your credit for about 7 years. And you're probably not going to be able to purchase another home for 24 months after that, because you need to meet seasonings in all of these. So it's a big deal. I mean, mortgages are a very big deal. And again, very thankful that you can come out and talk to people about it, because it's a huge step. It really is.
Yeah, no, because there's a lot of people out there with great credit. Look, I'm gonna buy a house, but they don't have any liquid assets. What they're spending is less. I mean, is more than what they're actually getting in revenue. You know, and people need to understand.
That is called debt to income. That is an underwriting.
Debt to income ratio. That's what it is. Yeah.
There you go.
So let's talk about that. Let's talk about that a little bit. You know, what happens when you encounter that?
We have guidelines that pretty much say you can't go over this percentage or you won't get approved. For FHA, you're looking at 43% debt to income. So what that basically means is if you're making, let's say, $100,000 or let's say $1,000 a month, right? Your monthly bills can't exceed $430 because that's 43%. Does that make sense?
Yeah, no, that makes perfect sense mathematically.
So what they're going to say is, okay, you're going over 430. You can't afford this house because your debt to income is going to exceed, and you're more at risk. You're more at risk to default. So there are ratios involved. FHA is we're looking about 43. VA is a little bit more lenient for veterans. We could go all the way up to 65%. Conventional, I believe, is 45%. So those are the ratios for the most part.
All right, so those are the ratios that you want to be at before you even think about actually going to. How can you go about finding this out? Is it something you can get on your credit score? Like, how does that work?
Well, there's a mathematical way to do it. You could get basically say, I pay this much for credit cards, I pay this much. It's only credit cards, auto loans, installments, stuff like that. Don't count your utilities, cell phone, none of that. Although it plays a part, but not an actual underwriting,
Or your rent, I would imagine, right? Because you're going into buying a home. So,
Yep. So all of that, you just add all of that up and then divide it by your income, what your monthly income is. So if you make, $12,000 a year, you make $1,000 a month, So, and then just do the math with that, and then you could find your debt to income like that. Or you could just consult a loan officer, and they'll probably do the math for you a lot quicker than what I can do. So they're out there.
Can you go into a bank and get a consultation type of deal? Because a lot of people don't know. I don't know. I never stepped into a bank. I want to buy a house.
The only thing I would do is just for your own resources. I use Credit Karma. Get Credit Karma. That gives you more or less like a way to gauge where you're at. It'll calculate and run through Experian, I believe it uses, and it'll calculate your credit as far as how many credits you have, credit cards you have, how many auto loans you have, stuff like that, and it'll also take into play a lot of other factors that can make up your credit score. So they're pretty accurate.
All right. So you want to make sure you stay over 35%, correct? That's like a good number, I would imagine.
For your FICO?
No, for your debt to income ratio.
Yeah, you want to be anywhere under 40%, I would say.
Under
40%.
So it's the lower the better, not like the higher the better?
The lower is the less debt you have. The higher is the more debt you have compared to your income.
So if you have a 65% debt to income ratio, that's not good.
No, it's not.
Okay, so that's to be under that. Oh, okay. All right,
Yeah.
cool.
Mm-hmm.
Well, that's good to know. Now, moving over to the veterans, which is something that I'm really excited that you do because, I feel like our veterans should, especially in the in the the political climate right now, our veterans, we really, have been, taking a hit, in the media, being called a sucker or whatnot, and now people are backtracking on their words. But I'm happy that you do go out there and that you're actually helping them out because I feel like they deserve, a bigger break because they go out there and they defend the country. Now, what is it exactly that you do to help veterans? Because, I have a lot of friends that are veterans and I would like them to, that are actually interested in owning homes. They're at that age. And, could you speak a little bit on that? And what Veterans United does for them?
What the company itself does, my company is actually pretty great. We actually have a foundation for veterans. Our employees actually contribute to that as well. And basically, we donate and we give, families in need things. We do a lot as a company. Myself, I do what I can through VA to make sure that a veteran is in a home, to make sure that we service as many veterans as we can, to make sure that there aren't any more homeless veterans on the streets or struggling. We do have a really good respect for them as a company as a whole, and I'm happy to be part of it.
Now, if I'm a veteran, right? Let's say I go into Veterans United and I want to buy a home, but my credit isn't where I want it to be. Is there something where you go out and you help them, fix their credit? Or do you give them some kind of guidance there?
Yes, sir. Actually, my company specifically, Veterans United, has a program called Lighthouse.
Lighthouse?
What it does is basically it helps you get to where you need. It'll guide you and let you know, okay, this is your credit. You were a tad shy from meeting the FICO, but, do you want to work on it? Do you want to see about building it? And we have a lot of customers that use that Lighthouse program to get to where they need. there are sources out there, and there are, people that are educated about it, like myself. There's plenty of people out there that can help. You just have to ask for help, So.
Okay, and they'll help. That's fantastic. Now, how does somebody become an underwriter? Have you always been in the loan industry your whole life? Like, how does that work? Because there's a lot of people that look for careers and they don't know that there are these fulfilling careers out there.
Yeah.
Because not everybody's on the same bandwidth. And I feel like we always get caught up in what we see every day in social media and what everybody's doing, but we don't realize that there's actually great career paths out there that you can take that are fulfilling, and you're actually out there helping people and changing their lives.
Yeah. It's one of our values, actually, enhance lives every day. Basically, I didn't look for underwriting. It honestly fell on my lap. I'm being 100% honest with you.
Okay.
I was in the finance field since 2007, I think. And I started with auto, and then I moved up to home equities, and then I moved up to mortgages. So in the 13-year experience I have total in the finance industry.
I'm glad you brought that up. Home equity, right? That's a big time term. What does that mean, man? Like, honestly, when
home equity is fun. It's so much fun. I don't care. So basically, what happens is you buy a home. It's an investment, right? It's a happy moment. You're no longer paying a landlord. You're paying for your own collateral, your own property. So as you're paying for it, of course your original value goes down of the loan because you're paying towards the principal, but also the value of your home goes up, right? So that means when you got a house that was valued at $200,000, in 5-6 years that could be valued at $215,000. So you have home equity. You have that equity of $2,000 that you owe to the $215,000 that is appraised. You have $15,000 equity. So basically, if you were in ever dire need, let's say, you got too crazy on credit cards, Christmas got crazy, you have a whole bunch of bills popping up, your ex has a whole bunch of debt you have to consolidate, don't worry. Home equity's there. You could take out a loan as a home equity loan, use your home as collateral, and you can pay all this off at a very low interest rate, interest rate compatible to the market. So it's an amazing way to use your investment.
Really?
Fun.
I didn't know you could do that. Really?
Yeah.
So wow. So all right. So if your home was worth a certain amount and now it's worth another amount, you could take money out on that amount that it's now worth. So
Bingo, bongo. Done.
And what?
Bingo, bongo.
There you go, baby. Yeah. All right, guys. All right. So that leads me into my next question. Redlining. Do you notice that in where you work at?
Redlining. Wow, I haven't heard that term in forever.
Yeah, is that stuff? Do you give loans to everybody?
Yeah, but redlining is a big no-no. Yeah. It's basically, if I'm not mistaken, correct me if I'm wrong, is that where it's kind of discriminatory?
Exactly. You're discriminating against a person's race, religion, color, creed, sexual orientation, and not giving them a loan.
We actually, as underwriters, we have to go through yearly compliance, and we have to get certified. We have to have credentials to be able to underwrite. So those are actually part of our own, like, kind of morals or motto, like, make sure that there's no discrimination, there's no racism, sexism. We welcome everyone as long as you have the credit score, the income and the assets, you're good to go, as long as you're 18 and over too, but
well, that's good to know. You got to be over 18 to get a home loan.
I think it's over. I mean, honestly, anyone that has credit, to be honest, why would you want to buy a home at 18, to be honest? Like, that's kind of crazy.
I mean, you never know, man. You might be a child star.
Come out of high school and buy a house. I'll be rooming
anybody
for
can be a
about
client as long as they're over 18, you know what I mean?
That is very adult. I'm so proud of him.
Yeah, we all want our kids to buy homes at 18, and we don't have to worry about
buy my home. Right.
Like, that's crazy. All right, that's good though. So you haven't seen those kind of practices in the places that you worked at, which is good.
No, we're good with that.
Man. And you said you're in Texas, so that was one of the places that were that have been unfortunately have undertook those kind of those systems, but that doesn't happen. That's a great thing to hear.
Mortgage industry is pretty. We're just all about making sure that the finances are good. We don't care, about everything else. So that's kind of our practice in general. So.
Well, that's great, man. So, Ms. Perez, we've reached the part of the podcast where we're gonna play 5 words with Angel. 5 words with Angel. I'm going to give you 5 words or phrases. You're going to tell me the first word that comes to your head. The first word is home.
Loans. That's not fair.
Okay. Because the first thing that came to your head. All right. The second word on 5 words with Angel is FICO.
Credit.
All right. Beautiful. Here we go. The next word on 5 words with Angel. Veterans.
Army.
All right. That's what's up. Shout out to everybody out there in our military, doing their thing, and we appreciate everything you do for us, since the beginning of time. Well, since the beginning of the United States.
Right.
The next word I'm about to flip it on you a little bit. I heard you're from New York and you like a certain team. The next word is Giants.
Blue. Come on, blue.
Right. And the final word on 5 words with Angel is New York City.
Always.
All right. That's what's up.
Let's go.
Well, Ms. Perez, thank you for being on the podcast. Now, before we end, first of all, where could we find Veterans United? And give us a message to anybody out there that wants to buy a home or that is interested in buying a home. Anyone that would like to get into this career, just give us a breakdown of a final message breakdown of these things that we just spoke about, a little summary before you go. First, let us know where we can find the Veterans United Home Loans and any other place that you recommend to go and get a home.
I'm not advertisement for Veterans United, but I mean, you can find us anywhere, honestly. VA loans, I'm pretty sure they pop up everywhere on the screen, on Google. There's no actual, contact.
You have a website?
VU.com, I think, probably.
Okay.
I don't know. I've never looked this up, and that sounds real crappy, but I've never had to. I have home pages at work. I've never had
look, it's all right. You're behind the scenes. You're not part of the marketing department.
Damn. Okay. And as far as underwriting, it sounds boring, but if I have no college education. I'm straight out of high school. I had a kid when I was pretty young, so I just it fell on my lap, but it's overall a blessing. So I guess the words of wisdom I have is just do whatever you can, and it's gonna happen. Just work hard at it.
And one final thing, how do you feel when you get up, have you ever been around people that have gotten their homes approved for the first time? How do you feel when you see the look on their faces, or do you see the look on their faces? Are you involved in that situation?
We're mostly back end. We don't get to see it. We do get a lot of thank you letters and emails.
Okay.
But it's very rewarding. Every year we have like a holiday party, and they put a nice little tape of the people that get to experience the faces of the veterans. But for the most part, I've never witnessed it firsthand. But I would assume it's fulfilling.
Okay. Now that we go over everything, is there anything you think I left out that people should know, or?
No, other than being able to buy condos and townhomes, that all falls under the same category. Because I know you're in New York, so you probably got more condos than anything else, unless you go out to Jersey. But even still, there's that all applies for that. Other than that, I think we're good. We're solid.
All right. Well, Ms. Perez, thank you for joining us today on the Angel of Words podcast. You gave us a valuable service.
Hope I didn't put anyone to sleep. I'm sorry.
No, it's all good. No, we're very entertaining, man. I really appreciated everything you did for us today. Shout out to Veterans United Home Loans, and, keep doing your thing, girl.
All right, cool. Thanks, Angel.
Talk to you later. Be good. Thank you. Hello, everyone. I hope you enjoyed my interview today with Katherine Perez from Veterans United Home Loans and an expert in getting us to that dream home that we've always wanted. Now, if you want to continue following the Angel of Words podcast and getting that sauce, follow us on YouTube at Angel of Words ENT. You could also trail us at Spotify, Apple Podcasts, and wherever you get your podcasts. Plus, if you want to know what I'm up to on my social media, follow me at Angel of Words ENT. Thank you for tuning in, everyone. Talk to you later.